The venture capital program it would be the most comprehensive venture capital program in Canada. We have students competing. We have students who come to the university to compete. We have 2 and 3 different courses in the area, and a big network within the community, as well as a student fund. So the students run a venture capital fund. So lots of activity in both of those areas. I worked in the entrepreneurship area long enough, and I felt like students needed to know how to get the money to be able to really build companies that could be life changing. And so we started with the entrepreneurship program. We were one of the oldest entrepreneurship programs in the country. And then we built the venture capital program from there. We also have the Master of Technology, Entrepreneurship, and Innovation. So I run that as well. That's the master's program in technology, entrepreneurship, and innovation. Yeah. My PhD were in venture capital and specifically in the area of angels. So I've been coming to, this event for, 15 years at least here locally. And, St. Mary's just recognized as a very, very big business school, very big finance school. And so being able to cover off the private side of equity in addition to what is traditional for most universities, the public side of equity is important. And so being kind of a co-partner and a leader in this area, along with NACO and Invest Atlantic and calling the event funding founders and so on is just what we do is perfect for us. The bands that are in existence have, been kind of shaken up a little bit lately. And so I think there appears to be a little bit less activity than there may have used to have been. On the other hand, we have a very large cohort of independently operating angels. And so what we're kind of seeing when we look at that is research that was done quite a while ago that showed that about 30% of all of the incorporated companies in the region had some sort of independent finance in there that was non-arm's length or that was arm's length and non-family oriented. So, I'm sure that's changed a bit over the years, but not a lot of areas that have that kind of a background of doing research in where are the actual independent angels. So I think there's a lot of room for NACO to grow here because I know that those angels are out there. They may not even know they're angels. They don't even know what an angel is, but they are out there and they're investing in other people's businesses and they're helping things to grow. So it's I think it's a good place to be able to grow from. Right. Well, the big thing is, one of the big things is visibility. The other one is that kind of network effect of being able to do deal generation and then to, evaluate deals, do the due diligence on them and so on. So it's nice to have a group of people working and operating in that area. Some people have the money and they're maybe just not as motivated to do some of the work. And so being a part of a group allows them to have that excitement, the fun, the opportunity to invest in innovations and not have to do everything on their own. The venture capitalists are professional funds. And so they are motivated by a fund mentality, which is very different than an individual mentality and an individual motivation. And so, VCs are looking for a specific kind of collection to be able to put in a portfolio and to be able to kind of manage that portfolio for a certain sort of return. Being part of the kind of action and the kind of the live community that might be something more of an angel activity is definitely more of an angel activity, either independent or as part of a group. Everybody gets criticized for it, and it's hard to criticize people who've worked hard and who see an exit and see an opportunity to maybe make their way out. Crawling up that next part of the curve is extremely difficult to do and takes enormous amounts of money. and possibly the VC or the angel community recognize that the appetite for that kind of enormity of investment is possibly not here. And I don't think anybody would be even more delighted if they were always other countries that were coming in and buying our companies. We are making some of the best companies in the world because they do come from all over to buy them. I just think I think this is kind of a virtuous circle. I think we're building on good things. And after a couple of $100 million, then maybe there'll be the $500 million. And then we'll move into the $1 billion range, and that we'll get better at it. But it is not surprising that there may not be a big appetite for that huge influx of capital that's going to be necessary for, exits that are better than that. Yeah. Right. Well, I was particularly interested today in working with the entrepreneurs in the group to help them identify that there's a lot of new research that's looking very carefully into the language of the questions that the investors are asking and the kinds of prevention and promotion types of questions that are being asked. And that this has very obvious, not obvious, statistically significant impacts on the amount of funding and who gets the funding. And so we went through some detailed scenarios of how that plays out and how that works. And I hope to be able to work some more in that field soon. Yesterday, I was making a point that, some recent research with TechCrunch and Mass Challenge and Boston Consulting Group has pointed out that women receive quite a bit less investment funding, even though the revenues that they generate are greater over a 5-year period, and that the investment efficiency that they produce is more than twice what it is for men. And so these are some very, very recent, works of research that were based on historical observational data. So it wasn't like somebody sitting around picking a sample of, these people and trying to find out what happened. This is just like volumes of, data from previous business, very successful business accelerators and incubators and competitive environments and funders. And so, I think investors should be looking to ask women some of the same questions that they're asking men instead of some of the questions that they are asking them, and recognizing the fact that if they're looking for revenue per dollar, they're getting it more with women than they are with men, even though women receive, considerably less number of fine. This is the kicker, a reduced number of financings, and then when they do get a financing, it's a reduced amount of money. Well, the research doesn't show that women investors invest in women. So as the number of women in investment is increasing, the number of women being invested in is declining. So the gap is widening instead of getting better. So it's hard to say that women funds, women investor funds would actually improve that scenario. The one in New York, which is a big dollar value to hop into and to be a part of, they make most of their investments in men. There's, another one on the west coast of Canada, they make their investments in men. The one that's, kind of thinking about developing here locally in Atlantic Canada, I don't know where they are right now, but my feeling is at the time they weren't kind of, thinking about investing in women per se. The key to unlocking a lot of barriers, I think, is to establish the kinds of questions that you want to ask and ask the same questions of women that you ask of men. And then you might be able to get the same kinds of answers, the same playing field, and the women may be observed as being, where they are, better revenue generators and better investment efficiency generators.